Welcome to my YouTube channel. Here is the Random Trader. So today I'll be doing something different. I'll be backtesting my strategy. This full strategy, you can check it in my YouTube channel. I've already posted it. What I'll be doing today is that I'll be backtesting a whole month. So the month that I've chosen today, I've chosen November. I'll be backtesting AUDCAD for the month of November. So let's start analyzing and see how November actually was on my strategy. So before I go, make sure you subscribe and you like and even share this with people who you think will learn from this video so that my channel can go. And remember to also leave a like so that my video can be recommended to many people like you. Yeah, go on. Let's take a few minutes for you. A few minutes actually. Let's take a few seconds. Come on, like the video. Also subscribe. Let's go to the video. So before I do anything, what I do is that I look at the calendar. So at the start of each month, what I do is that I look first at the calendar and I see at the calendar, I see what I need, like which days are valid and which days are invalid, because what the calendar does, the calendar acts like a roadmap. So I use it to know which days are valid and which days are invalid. So first, every day, what I do is that I first check which week is the NFP month, because I don't really trade on the NFP week. So from here, you can see that here on the Friday, this Friday on the November 3rd, it is NFP. So what that means is that here from Wednesday, Tuesday, and Friday, I will not be trading. I will only be looking forward to trade on the week after NFP. So I'll be looking forward to trade on Monday, which is November 16th. So after knowing this, I first check which days have CPI and which days have PPI and which days have interest rates. Because you can see here, I'm trading AUDCAD. So what I do is that I check if we have CPI of AUDCAD or CPI of CAD. If I have CPI of AUD, that means it automatically makes that day an invalid trade for me. So let me show you guys here on the calendar. After knowing that I'll not be trading from November 1st to November 3rd, what I do is I check on the previous days. I check if in which days do I have AUD CPI or CAD CPI or USD CPI or USD PPI, because on those days I don't really look forward to trade on that day. If you check my strategy video that I posted, you'll see exactly that I do not really look forward to be trading on that day. So after I do that, you see here on the screen, it means I will not be trading on here, like November 14th, I will not be trading. And also, I also include bank holidays. So it means here on November 1st, November 13th, I will not be trading on November 13th because we have CAD bank holiday. And if here you go up, you can see here in November 21st, I will not be looking forward to trade. And also on Thursday, we'll be trading because we do not have any bank holiday and we only have JBPY and USD holiday. And what we really care, it's either AUD CAD holiday or AUD holiday or CAD holiday. So at this point, let's go to the charts and we see, starting from Monday 6th, and we see if we'll be getting any trades, because we have seen that in this month, we will only be starting to look for trading opportunities on Monday, November 16th. So let's go to the charts and we see if we'll get an entry. But first, we'll start from the daily time frame. We'll see what the daily time frame tells us so that we can move forward to the smaller time frames for us to actually frame a setup so that we can look forward to entries, because each and everything starts from the higher time frames, then we go to the smaller time frames. So let's go to the charts and you see how that will go. So after checking the calendar, like I said before, what you do is you start on your higher time frames, which is D1 or daily time frame. What in the daily time frame, you first zoom out and you see the main general trend or the long-term trend. So you can see here the long-term trend. You always start to the top of the chart to the lowest of the chart. That will tell you the long-term trend. So if you see here from here up here to here down, you can see this pair AUDCAD has been moving down. So what this does, it sets in the trend, or it gives us the bias. So what we'll be doing right now, we will only be looking forward to only sell. We will not be looking forward to buy, but we'll only be looking forward to sell until the market takes out these lows here. That's what we will be looking forward to do. So after knowing that, let me remove this. What you do is, thus after knowing the trend or the bias, that's when the restriction comes. Before I continue, remember the saying, a restricted trader is a profitable trader. So for you to be profitable, you need to be guided by restrictions. That's why in each and every strategy that you have, you need to be having many conditions that guides your strategy. What rules does, or what restrictions does, is that it gives you the rules that you have to use so that you can be able to execute your strategy or to collect your data samples over and over again. So what the rules does, or what the restriction does to your trading, is that it helps you to know where to buy and where to sell, and it makes your trading reasonable. And you should make sure in each and every strategy that you're trying to make, or in each and every strategy that you yourself has tested in the market, you should make sure that the rules that you have created are easy to replicate. Because most of the times when your strategy is very hard, it will be hard for you to replicate, and it will be very hard for you to execute over and over again. Because what makes you profitable in the market is the consistency. It's you being able to execute over and over again. And you cannot be able to execute over and over again if you simply don't know, you simply don't understand your rules. So first, make your rules simple. If you make your rules simple, you'll be profitable, because that strategy of yours, it will be very easy for you to replicate. So let's go back to the backtesting. So after knowing the bias, what you do is that you go to the candles. These candles, what you do is that after knowing that you're only selling, you can only sell if the previous daily candle has closed bearish. So here you can see it's on Friday, and previous when we checked in the calendar, you saw that we are only looking forward to trade on 6th, because here this is NFP day and we don't trade on the NFP. So what we do is let's go on so you can see here now we are on Monday. So here on Monday, we can only look forward to sell if the candle on Friday was bearish. If the previous daily candle, which was on Friday, is bullish, what you do is you wait until the candle closes bearish for you to look forward to sell. You cannot really be looking forward to buy in a buying market. Like I said in the previous video, what you do is you wait. So here you can see here, it makes Monday an invalid day for you to trade. So you can see here there are restrictions for you to trade. How did I do this? How did I know that this works? All of it is through backtesting. So let's go on and we see if Monday actually closed you can see here Monday actually closed bearish finally. So what you do is, after this candle actually closes bearish, let's go back to this candle here. You can see here Monday closed bearish. What you do is you wait first. So you can see here. So what you do is you check which part of the market you're in. You first check if you're in premium or discount. You first check if where you want to look for sales. Are you really in premium? Because like I said before, you only sell high and you buy low. You first wait for the market to get at a very expensive price for you to actually sell. And you're looking for something to be cheap for you to buy. So from here, what you do, you use your Fibonacci and you draw it from the higher part of the dealing range, which is this one, in the lower part of the dealing range here, which is this one. And you just draw it. So you can see here, after you have drawn it, you can see from here to here, this is what we call premium, and here it's in discount. So automatically, this place here, it becomes a good place for you to actually look for your sales at. So after seeing this, what you do is you go to the smaller time frames, because you can see here the higher time frames have given you a yes that you can look for sales. That's when you go in the smaller time frames. So in the smaller time frame here, you can see here we are still on Monday, and we have to wait this candle to actually close, because we saw that we're not trading on Monday, but we're looking forward to trade on a Friday. I mean on a Tuesday. So from here, I always start trading from 5 p.m. Rwandan time. So here I put my vertical line from 5 and see where price is at 5. Here where price is at 5. Okay, so you can see here what price did. It did not give me any entry. So what I will do is that I will wait for price to come back on this price here, or this place here, for me to actually look for sales, because here you can see it is in a very bad place for me to actually look for buys, for sales I mean. So I will still wait for it to come up here for me to look for my sales. So here you can see that all the price just kept on moving down and did not give us any entry. So here specifically, it looks like we'll not be getting any entries on this day. So let's see. So from here you can see it has started to retrace. So like we did in D1, remember price is factor, we do it in M15 too. The dealing range from up here to down here, and we wait for it to come to what? To premium, of course. So we can actually sell, because we only sell from what? From premium. Let's see. So you can see here it came in premium, but then it came when it's already late. I only look forward to enter from 5 a.m. GMT plus 2 to 8 p.m. GMT plus 2. And you can see this one down here. Here, it was at 11, so I don't look forward to trade at that time. But we are in another day. So as long as it's in another day, what do? You do two things. You go in D1, you check if the previous day closed bearish for you to actually look for buys on Wednesday. So let's go in D1. So if you go in D1, you can see here Tuesday, 7th November, closed bearish. It closed here bearish. So what we do is that it makes it valid. The second thing is we go to the calendar. If you go to the calendar here, you can see that November 8th, we do not have CPI of AUD or of CAD or USD CPI or PPI. So this Wednesday, November 8th, it becomes a valid day for us to trade. So after seeing this, what you do is that you go to the M15 and search for entries on premium. So what you do here again, so like I said before, what you do is we wait, you just pull this to 5 because that's when we actually look forward to search for any entries at. So here, let's go to 5 a.m. and here we'll just be waiting for an entry because price has already gone to premium, but we want it to come a little bit in premium. Let's see how that will be. You can see here price has already gone to what? To premium. What we do is we wait for our M pattern. Remember, if you're looking forward to sell is an M pattern. If you're looking forward to buy, it's a W pattern. So here it's something like this, the M pattern, and we enter at the neckline, looking forward to sell. So here, yeah, let's wait and see. So you can see there, it's already at 5. Let's remove this. Let's see if the M pattern has already been presented or the price has already, the M pattern. You can see here we have this move up, this candle that moves down. So this is, it goes down, goes up, and goes down. So this is already an M pattern. But then before us looking forward to enter at the neckline, we need to see if the H1, the previous H1 candle actually closed bearish for you to actually enter the trade. So here it's up here, it's not down there. Let's see the neckline well. You need to be very precise with this because you just don't draw it anywhere. You can see the neckline is somewhere here because you can see this is the move up, the move down, the move up, the move down, and the move down. So the neckline is somewhere here. But then what you do is you go to H1. So we're looking forward for an entry here at around 5. But then I said that the previous H1 candle has to be closing bearish for you to look for sales down. So you can see here, this candle here, the previous candle closed bearish, so that gives a go ahead. So it means it's safe for you to actually be entering sales at a time which is at 5. The time from 5 to 6, it's safe for you to actually enter for buys. So if you go to M5, what you do is, because here it's already M15, it's already 5, what you do is you set in your sell limit here. I always, like I said in the previous video, 15 pips stop loss and 45 pips take profit, a 1 to 3. After you have set that, you just let the probabilities play out after this. It's either it hits your stop loss, break even, or take profit. And remember, I go to break even after price has gone to 20 pips. So what I do is I go here and I measure 20 pips. 20 pips, it's somewhere here. Okay, there. So let's see. Okay, you can see there price came and tagged you in. So let's see what will happen after. Let's extend this. Yeah, let's extend this. So you can see here price went in a drawdown there, but we did not go 20 pips, so we did not get an opportunity to set that to BE. Let's go on. Price came back in profit. Okay, went back. So this is where your emotions start, your heart start bumping, because price just moves, it goes to stop loss, it goes to in a drawdown, then to profits. This is where, like, you being a trader, your patience gets very tested, because you're like, why is price going like this? But then let's go on. Let's see. So from there, you can see here price went 20 pips. This is where you set your stop loss to be here. Yeah, so you here what you do is that you let your trade run. So it's either BE or take profit. Let's see how this goes. You can see there. You can see there. Like, it was really close to hit your take profit, but then it's just going up. But right now the trade is risk free, so it can do really anything. And there it goes to take profit. So it means this trade here, it's plus 3R. See, plus 3R, which is take profit. This trade hit take profit. So you can, that is 3R for the 8th of November. So you can see here, this is the following day. What we do is we wait for the other day, because you can see here on 9th November, this is when the trade hit take profit. So we wait for the following day. Okay, the following day, when was this? This is 10th November on Fridays. I always don't trade on Fridays, so it means this day becomes totally invalid too. So we'll let the markets keep on playing out until on Monday. Yes. Let's increase the speed. Okay, so here we have 13th November. Let's see on the calendar first. The calendar. Like I said before, after knowing when your invalid days are, like here on the screen, you can see that on Monday we have CAD, which is not a good trading day, because I said I always choose to stay out on bank holidays, because on bank holidays the market doesn't really make that much of moves, because it's a holiday, so the market does not really move, and it's volatile on that time, and also the spreads are very high. So I don't look forward to trade on these days of bank holidays. And also the USD CPI and USD PPI. In my previous backtesting, what I've seen that these days it makes the day not to be very good, or not to move very well like I wanted to. And what I chose is to stay out than to be in, because I don't find it very logical for me to make profits, for example, in one day, or one CPI or one PPI, and lose it on another CPI. So what I do is I just stay out and wait until on the days that don't have this news of PPI, CPI, or AUD CPI, or CAD CPI. So from here you'll see that on Monday 13th, Monday 14th, Monday 15th will not be trading. The days that the day that we will actually be trading is on Thursday, November 16th. This is the time that we'll be looking forward to trade. So let's go to the charts and we see how Monday 16th actually was. Like, yeah, let's see how Thursday, November 16th was like. Starting from daily, we check if the previous day on 15th, if it caused bearish, then we go to M15 to search for our M pattern. As simple like that. And remember, all this needs to happen in premium, because we're looking forward to do what? To sell. Let's go and we see how November 16th was. Here we are again on the daily. So you can see that the only day that, like I showed you guys before on the calendar, the only day that is valid again is on November 16th. So as to be able to trade on November 16th, what you have to check, you have to see if here on Wednesday, November 15th, it needs to close bullish, bearish. It needs to close bearish. So you can see here it closed bearish. So here it makes Thursday, November 16th a valid day for you to trade. And you can see the price is still in the premium. So what you do is you go to the M15 and you see if you're going to get an entry from there. You can see here. Let me reduce the speed. So from here you can see we are even like here on November 16th. Remember, use the Fibonacci. So here you can even check the day exactly here on the calendar, exactly to your trading view. I'm using an indicator, but then here it's not updating because it's still showing November 15th while we are on November 16th. So the same thing, what we do is we draw our Fibonacci. You can see here we're still in discount. We cannot be looking forward to sell here, but then our time has not yet reached. We're going to 5 a.m. Remember, always look for entries at or after 5 a.m. GMT plus 2. So what you need to do is just change the time frame, or you can change according to the time zone you're at. For me, because I'm in Rwanda, which is GMT plus 2, that's why I use GMT plus 2. So you can just change it according to your time zone. Okay, so from here you can see we are still in a discount, so we are not looking forward to buy there. Okay, let's update this because it went down from here to here, but we have another dealing range. So our dealing range is no longer here. It has moved from here to down here, because this is, as long as the price has moved, you can see here the price took all these highs here. All the ICT traders like calling it liquidity. It took all this liquidity, so this is where our dealing range will be, our dealing range high, and this is our dealing range low. Let's see if it will come in premium for us to actually sell from there. Okay, there you can see we are in premium. Let's see if we get our M pattern. Our M pattern, you can see it's being formed. You can see there it's being formed. We have our highs, our low, our high with this one candle, and our low. We're waiting for price to close below this neckline and then a retracement back. But then we don't enter at the retracement until H1 also closes bearish. The previous H1 time frame. So here, what is the time? Let's make these candles big. Let's make these candles big here. Our neckline is here. Let's see if we're going to get a candle closure there. Okay, let's see. You can see here this candle has already closed. Let's check in H1. H1, you can see this candle is bullish. So what we're going to do is we're going to wait for this to close at 11. So our entry should be from 12 going up. So it's either at 12 sharp or 12 at the time within 12 to 1. So let's see. We cannot be looking forward to enter the neckline retest before 12. That's the only time that we'll be looking forward to enter the trade at or to place the trade at. Let's put our stop limit, but only at 12. That's the time that the entry will be valid. Remember, I use the same thing. I use 15:45. So let's see. You can see here, what time was this? This is not yet at, you can see here, this is not yet at 12. So we're not actually entering here. We have not placed the trade yet. We have not pressed the trade yet. We only press the trade at 12. So you can see here it's already 12. So our trade is already triggered. We have already placed here a trade at 12. So let's see how it will run. Remember, putting the 20 pip alert so that you can remember to set in your break even. Let's see how this will pan out. So you can see here this, it hit your stop loss. So you can see this is not, it will not always be your way. Sometimes you'll be getting this kind of stop loss. So after it has hit stop loss, remember, I look forward to enter two trades in a day. So after this, I'll be looking forward to enter another trade for me on that specific day. So you can see here. Let's first see in daily. Now let's just go back. Yeah, you can see here. Let's see if we're going to get another M pattern here. Okay, so you can see here, this M pattern is actually very clear. We have it up, down, up, down. Our neckline is somewhere here. Let's just move this so that it can be clear. Here, we're looking forward for it to come down here and see if it will close down there. Okay, it's creating another M pattern because we have up, down, up. Let's wait for a down. Okay, we have that down here. Our neckline is no longer here, is up here. This is our neckline. So we'll be looking, let's see if H1, the previous H1 candle. So because first let's go in M15. If you go in M15, you can see here we have at 5. So the candle from 4 to 5, it needs to be bearish for us to be looking forward to enter any sales. Sorry, H1. Okay, you can see this candle here from 4 to 5 is bearish, so we can enter the trades at the neckline. You can place here your trade. Place here your trade like this. I've set in a template, so it's easier for me to do that. You can see here the price came back at 6:30. Okay, let's see. Did it? Let's see if. Remember, let's set our 20 minutes. 20 pips. Sorry, 20 pips. See here, there. So now we can go break even after this. Let's go break even. So there the price takes you out in break even. So on this day we hit minus 1R. Just put here minus 1R, minus 1R. So let's see. After doing this, we first see again we first go to the calendar and see, because this is Friday, 17th November. We are not trading. Let's see if Monday is a day that we'll be trading. We go to the calendar again, 17th here. So here on Monday, you can see November 20th is a good trading day. But Tuesday, 21st is not a good trading day because we have CAD CPI. So let's see if Monday. So after seeing that, we saw that the only trading day that we have after Friday 17th November is Monday 20th November. So after that, after knowing the day, what you do is you go to your calendar and see. For you to be selling on Monday, it means Friday needs to have closed bearish for you to do so. And you can see here this is Friday here. Let's go back. This is Friday here, and you can see it's very bullish. So that automatically makes our Monday invalid. So we will not be trading on Monday just because of that. Let's check. So you can see here Monday is bearish, Monday is bullish. So automatically, if you'd be looking for buys on this day, it would just have taken you out. It would have already hit your stop loss because you will not be following the rules of the strategy. The rules of the strategy says that for you to be looking for sales, it means you need to wait until the day previous. It needs to be closing on a bearish kind of way. So this automatically makes your Monday invalid. Let's see if Tuesday is a day, because if you go on the calendar here, you can see here on Tuesday. Oh, on Tuesday here, this is not a valid trading day because we have CAD CPI. Remember the calendar stuff, we are staying out on CAD CPI. But here you can see on November 22nd, this is a valid trading day because we don't have CAD CPI, AUD CPI, USD CPI, or USD PPI, or Fed interest rates news. So it's either AUD interest rates or CAD interest rates. That's something that I've just added. I remember that I didn't really point out the other time. So don't forget also that we have also Fed interest rates. So let's see how the November 22nd, how it played out. Remember, we first check the daily time frame again. So let's go here. Check first. November 22nd. November 22nd is on Wednesday. So let's see on Wednesday. Let's see if Tuesday closed bearish for us to look for sales on Wednesday. So you can see here Wednesday actually closed. Wednesday actually ended up closing bearish. So what we do, we can look at entries in the M15 time frame. And before we go there, you can see here, you can clearly see the daily we are still in premium. Remember that ICT premium and discount teachings? Just remember them very well. If you have not, remember to check my strategy video again, or just write ICT premium and discount here on YouTube. You'll see many videos on that. So let's go in M15. So let's first draw the dealing range. Again, the dealing range is from here to here down, because why? It took liquidity here up, this liquidity here, and here down it took all this liquidity. That makes it a valid dealing range. Just if you want me to make a video specifically on dealing ranges, how for you to know valid dealing ranges, just comment and you. I just figured out that I did not connect my mic, but then that's okay. Let's go on. So this is the high, the dealing range high, and this is the dealing range low. So what we do is, because this is on Tuesday, and Tuesday we're not looking forward to trade, we wait until it's on Wednesday, because we have checked and we proved that, and the calendar proved that today is a valid day, and also the daily time frame also proved today to be a valid day. So let's wait for 5, and it also needs to come to premium for us to actually sell. See? Okay, we're already at 5. Let's just remove this. Let's wait. So you can see here, this it went down. So the dealing range low changes. Right now it's down here. Let's continue the price. Okay, so here you can see it's kept on changing. So each and every time the price goes down to the dealing range, make sure you just move it according to the way like the market is going at that time. So let's wait for it to get here for us to look at the M pattern in premium. Okay, so you can, it's not yet in premium. Let's wait for it to come in premium. There, it's already in premium. Let's see. Let's wait for M. Yeah, so here you can see up, down, up. Our neckline is very visible there. Yeah, our neckline is down here. Let's see if we will get a candle close below this neckline here down. Okay. So you can see here we have another M being formed. So it goes, our neckline changes, up, down, up. We wait for another one down. The candle to close below this neckline. There, let's see H1. Wait. Let's see. So this candle already closed. This candle already closed down. Let's see. So here it's 2:45. Let's see if a previous candle. So previous candle, if that as it's at 2. So a candle that was from 1. A candle from 1. This candle here from 1. You can see from 1 to 2 it's bullish. So we'll not be looking forward to enter any trades from 2 to 3. So we'll be looking forward for this candle to close first bearish. So we'll probably be looking forward to place trades after 3. So from 3 at 3 or a time at greater to 3. Let's see here. Let's go and we see how this goes. So here you can see at exactly 3 and it lets you in. So there our entry could have been exactly there. Our entry could have been exactly there. You can see it's exactly at premium and it reacted on this FFG, but that's not really what we look for. It does not really, we do not really like, our entries don't depend on anything like that. We just need it to be premium and we look forward to those M and W patterns. So here you can see, let's see our 20 pips for us to go BE.
Okay, I found this on the web for 2020.
For us to go BE. Just put that, is fine. So you can see there it goes to your BE. So this trade is in BE already. And there it goes. Let's see if it goes directly. Yeah, it goes directly to the take profit. So here you'll be getting, on this day, you have your 3R here, which is November 22nd. What you do again, so you can see here this trade, November 22nd, you can see we have a 3R trade. Let's see if we go back to the calendar again and you see which trading days are valid. November 22nd, but here you can see on Thursday it's November 23rd. This would be a valid trading day too, but then it is not a valid trading day because we already have like a TP that was hit. Most of the times when a TP is hit, what I do is that I skip one day. So after this has been take profit has been hit, I skip Thursday. So here, this Thursday will not be a trading day for me on Thursday. I mean here on Thursday it will not be a trading day. And here Friday, I do not trade Friday. So all these days I will not be looking forward to trade. The only valid trading day here that I have is Monday 27th. So let's go in Monday 27th and see. So from the calendar showing that Monday 27th is a valid trading day. After the calendar showing that Monday 17th is a valid, Monday 27th is a valid trading day, what you do is the same thing that we always do is that you keep on repeating. You can see here what I do is I keep on repeating the same things over and over again. That's what you should also be learning to do as a trader. So you can see here we're trading on Monday, which is Monday 27th, like I said before. So the candle on Friday should have closed bearish for you to be trading. You can see here this candle is bullish. I mean it's bearish. You can see it closed bearish even if it's a doji, but you can see it's still bearish. So that means we'll be going in the small time frame and look for entries at premium. And you can if you go back, you can see that daily was actually still in premium. So yeah, let's check. So again, we draw our dealing range. Here again, the same thing, it took this liquidity, so it makes our dealing range high, and this is our dealing range low. Let's see, because this is on Friday, let's skip to Monday. Skip to Monday. Here you can see that it's on Monday. Let's wait for it to go back in premium, because that's the only place that we're looking forward to sell at. Okay, it's not yet time. It's not yet time. Okay, so you can see here, this is our M. This is our M that was formed here, from here to here. Let's go back in time. You can see this here was our neckline. Let's do like this. And this is at 5. So let's see if you can like look forward to place trades at 5. But then remember, H1 time frame needs to close the previous H1 time frame. It needs to close bearish for you to enter at the neckline at 5, from 5 to 6. So it means a candle from 4 to 5. It needs to be bearish. Let's go in H1. So you can see here the candle from 4 to 5 here is bearish. This candle here is bearish. So we can enter the trade or place a trade there in at the neckline. So you put here your trade. Put there your trade. Let's remove this. Let's wait for it to trigger us in. You can see there it triggered us in right there. There triggers us in, and there it hits our stop loss. So you can see here this trade. Let's go back. You can see here the daily it has already hit stop loss. So from here we just put that it is a loss. It is a loss. So from this day we have a loss. So we do the same thing after this day. We see if the following day is valid for you to trade. You can see here it's on November 28th. So November 28th is a valid trading day. So let's go and see in daily time frame, and we see if the candle on Monday, if the candle on Monday closed bearish, and you can see here the candle is very bullish. It never closed bearish. So it automatically makes Monday 27th an invalid day to trade. Let's see if this 28th November closed bearish, to see if you can trade on 29th. You can see there this one is not invalid. It makes Wednesday 29th November invalid. Let's see if this will close bearish, to see if you can trade on 30th November. So you can see this one, it closed bearish. So 30th November is a valid day to trade, and it's still in premium. But let's check first the news on 30th November to see if it makes a day valid too. You can see here on Thursday, November 30th, we do not have any news that makes our day invalid. So it means here we can go in M15 and look for entries on Thursday, November 30th. Yeah. Let's see. We do the same thing. What do we do? Yeah, you guessed it right. We do our dealing range. The same thing. You can see how here it takes this liquidity, and it takes this liquidity. So this is dealing range high, and this is dealing range low. We do the same thing. We wait for it at premium. It's always good to wait for the market to come to you, and just not chase the market out of nowhere. You can see here. Let's go on. Let's see. There it's already in premium. You can see it's already in premium. Okay, let's wait for the W pattern to be formed. M pattern. Let's see. Okay, so up, down, up. Let's see if it will close down here or if it will form another M pattern. Okay. Down, up, down, up. So let's see. Up, down, up. Let's see if we're going to. Up, down, up. So we're waiting for a down, which will close above this neckline here. As simple as that. See? So you can see it closed down here. What you're going to wait for is a retracement back to the neckline. You'll be setting your trade here to down here. You'll see H1 also supported the trade. You can see here it went to the entry, and what you do is remember the break even rule here. So you wait for it. You can see here it went. So there is in BE, and there it went to the 3R. So you can see this trade was very fast. So you can see this is the last day of November, and also it went to 3R. So this is the 3R. You can see here. Let's check the P&L for November. You can see here we had how many trades? Very few trades actually for November. You can see we have 1, 2, 3, 4, 5, 6 trades in November. So you can see this, it reduces the number like of the days you're going to trade, but then it lets you trade only the high probability days. You will not be risking, like if you have a big capital or if you're funded, you should look forward to only trade on days that are of high probability, that you know that you'll be getting A setups. That's why I have many rules, and those rules will help you to know which days are very good to trade and which days that you actually need to stay out. So you can see from here, even if we traded 6 days, you can see we had 2 losses, and 3 wins. And from here you can see you have 1, 2, 3. This is 9R minus 2R, which is 7R. Is it? Yes, it's 7R. So this day, this in November, you would have made 7R if you exactly executed each and every trade here. That is all for this video. Just remember to subscribe, to like the video, and also to share it with your friends. And if you got to this point of the video, remember to join my Telegram channel. The link is in the description below. Until next time, it's your girl, the Rwandan Trader. Bye.